Assalamu alaikum wa rahmatullahi wa barakatuh. Distinguished guests, ladies and gentlemen, thank you very much for giving us the opportunity to present the Turkey Participation Finance Report, which was prepared in collaboration with our partners IRTI, Sebafi, by Thomson Reuters, and supported by our strategic partner, Turk Finance Bank. The topics I want to cover in this presentation, in light of the session that we're in, is the overview of participation finance and the role that it plays in the sustainable financial system that we are discussing here today. I want to give a brief overview of participation finance and its growth and development in recent years and where the industry stands today. I want to discuss some of the potential of the industry going forward and what are the key areas of growth that we see and what are the key areas to address for the industry. And if we have time, hopefully briefly touch upon some of the unique investment opportunities that this industry presents to investors in Turkey. To start with, the expectations of population from their financial services sector is very different to what it was 6 or 7 years ago. The financial crisis, the Occupy movements, which targeted the financial services sectors of many cities in the US and Europe, and the Arab awakening have led to a greater call of reassessment of the overall economic systems in these countries. And specifically to the financial services sector, some of the key themes that keep on repeating themselves and have gained greater importance in the eyes of the population is concepts of sustainability, concepts of greater alignment to the real economy, concepts of greater growth and prosperity for the significant part of the population, and concepts of greater equitable treatment of all partners in these transactions. There are a number of lessons that we can take from the financial crisis, but some of the key ones that I want to point out here that are perhaps more prevalent in the eyes of ordinary consumers and ordinary retail participants of the financial service sector are these. They expect financial institutions to be more responsible in their lending in the future. They expect global markets to be more aware of the dangers of trading in synthetic instruments and debt instruments and other derivatives. They expect the financial system to be much more greater aligned to the real economy with the aim of delivering real growth and prosperity to the populations that these sectors are meant to serve. And they expect policymakers and regulators to take a greater role in regulating these institutions, especially those that take deposits from retail customers, and to protect the interests of those customers. So these are a number of issues that are now prevalent in the mind of a number of populations, and we feel that participation finance has a lot of the values that would address a number of these concerns. I'll just briefly touch upon some of the values that participation finance, or Islamic finance as it is known in other markets, brings to the table. It is aimed to fulfill the aspirations of all parties in transactions, to try to create a genuine equitable partnership between finance providers and borrowers that helps to contribute towards the growth of the overall economy. It's about responsible finance and being more selective and responsible in the lending that they offer. There's an ethical paradigm attached to it in that there is limitations on activities that may be considered counterproductive to the health and growth of the economy. There is greater alignment and affinity towards clients in the sense of being greater aligned to the real economy and having transactions that are backed by real assets or real transactions. There is an increased governance element in that there is additional layers of governance that are meant to protect the industry from certain activities that may be considered counterproductive, like speculative trading and others. And Islamic finance at its root has a very inclusive proposition. And Islamic finance was introduced in a number of countries around the world to bring in a large part of the population that was unbanked at that point in time. And it's not restrictive to Muslims, but it's a proposition that can serve all segments of society. Participation finance is one of the fastest growing subsegments of the financial services sector, and in most markets where Islamic finance is supported by regulatory support, it is growing at twice the rate of the conventional banking industry. And if we look at the sector, it is predominantly dominated by few institutions. The top 20 Islamic banks control 55% of Islamic finance assets, and it's all concentrated in commercial banking. So participation banks or Islamic banks have a very strong affiliation with the retail banking segment, with the corporate banking segment, and have a responsibility to address their needs in developing future products and services. I want to touch upon in the next sector the growth of participation finance in recent years in Turkey and how the industry is shaped up and where it stands today. Turkey is what most analysts would describe as being a growth engine for Islamic finance. It is an area that has experienced significant growth in recent years. It is a country that has had recent government support to help the growth of the industry, and it is a region where Islamic finance is growing currently at more than twice the growth of the conventional banking sector. If we look at where it stands in terms of other key Islamic finance markets, Turkey sits somewhere in the middle. And the reason for this is that it is an industry that really took off in the last decade or two, and government support in terms of government initiatives have really started to come into force over the last 4 or 5 years. Going forward, we know that the government has given a lot of importance to the industry and has drafted a number of regulations, some that have passed, some that are in the works, to help facilitate the growth of the industry. And we know that there is demand from the corporate and retail sector, and I'll touch upon that later in my presentation. But we envision Turkey having the potential in future years to become as advanced as any other Islamic finance or participation finance economy in the world. Currently, the penetration of participation banking assets is 5% of the overall banking sector. Now, this places Turkey in the top 10, definitely, but significantly below some of the other more developed economies like Malaysia or some of the countries of the GCC. However, we anticipate Turkey to move along this scale very quickly over the next few years, and I'll touch upon some of the demand drivers that we envision will push this industry forward. If we look at the landscape of participation finance in Turkey, we see that there is significant potential for growth. Currently, there are 4 fully fledged participation banks that are operating in Turkey, and we know that the banks have been raising funds to expand their distribution channels, expand their products and services, and they have a very expansionist attitude towards the development of their industry going forward. We know that currently there are no participation finance windows, but there are a number of conventional institutions in Turkey that are looking to offer participation finance products in the very near future. Sukuk market is something that has grown significantly in Turkey with the issue of the recent sovereign sukuk and the introduction of regulations that will facilitate the growth of this market. We envision the sukuk industry to be one that will grow in the near future. The takaful industry, or what we would consider Islamic insurance, is at a very nascent stage, and Turkey as a country has a very underdeveloped insurance sector in general. Insurance assets make up insurance penetration is only 1% of GDP, which is significantly underpenetrated, and takaful makes up a very small proposition of that. However, going forward, as the penetration increases, we see takaful as playing a key role in the development of the overall insurance sector. Islamic funds is another nascent industry that has recently been established and slowly picking pace. And we envision, with the issuance of regulation that is meant to promote the facilitation of this industry, that this is another area which will pick up in the overall Islamic finance economy here in Turkey. If we look at the growth over the last 7 years, the assets of participation banks have been growing at 27% year on year. And if we look at penetration rates have doubled. In 2005, the penetration rate was 2.5% of total banking assets. Today, it sits at 5%. We know that the Turkish Association of Participation Banks and the government of Turkey has a target to increase this to 15% of total banking assets by 2023, and we see that as a very real proposition. To conclude this section, I just want to touch upon some of the key drivers that have facilitated the growth of participation banking in Turkey, and before we look on to the future projections and the demand landscape going forward. We know that, as containing a large Muslim population, there is intrinsic demand amongst a significant percent of the local population towards participation finance. The government has supported through issuance of regulations and facilitating transactions this industry, and that has been a key player in the recent growth over the last 5 years or 7 years of the industry. We know that increasing trade and investment links with the MENA region, with Southeast Asian region, has also facilitated the growth of participation finance. As the trade with the regions that are more developed in Islamic finance increases, we anticipate this to continue to promote this industry. And the strong SME base that exists in Turkey provides a unique opportunity for participation banks. As one of the key pillars of Islamic finance is to promote the growth of the local economy, and SME finance is a key area where a number of Islamic banks in a number of regions have taken a lead over many of the larger conventional institutions in promoting and developing. So these have been some of the key factors that have helped develop the industry over the last few years. Moving on, I want to talk about the demand and potential for growth. And Thomson Reuters and Erti and Sabafi, we did something unique in that we conducted a retail consumer finance survey. We had approximately 3,000 participants from all the different cities in Turkey, covering a wide range of occupations, and we assessed their preferences, their intrinsic demands, their perceptions of this industry, and we feel that this is data that will be unique to any decision maker who wants to engage in this country in participation finance. The full results will be shared in our report, which will be available towards the end of the month, but I want to share one or two unique insights that we have gotten out of this survey. The first insight is this one, and I want to run through this chart with you. Basically, what it shows is that currently, of our sample size, 33% said that they already had some kind of financial relationship with a participation bank. 55% said that they did not, and 11% said that they're unbanked. If you assess the results of those who said they do not currently bank with a participation banking institution, when asked would they be interested in entering into such a relationship, 62% said no, 10% said yes, and 28% said maybe. And this can lead us to some unique insights into the reach of participation banking. What this shows us is that participation banks have been very successful in targeting those customer segments that have an intrinsic preference towards participation finance. And they've been able to target those customers reasonably effectively. Of those who do not participate with participation banks, only 10% indicated a clear preference towards participation banking. If you look at 62%, which is the largest chunk of this, these are people that have an inherent disalignment or disapproval of participation banking. They said that they would not want to engage in any kind of relationship with a participation bank, and this leads to a unique insight. Why is there such a perception? And what we have deduced out of this is that participation banks going forward will need to adopt different customer acquisition strategies to try to target the different customer segments based on their perception of this industry. So to target the very easy segment, people who have a preference for participation finance, it's about launching marketing campaigns and improving distribution networks to be able to reach those customers and bring them into this sub-segment of the financial service industry. To target customers that answered maybe, these are customers that don't have, in our opinion, they don't have an inherent preference for or against participation finance, but their decisions are made on other criteria. So for participation banks to be able to target these customers, they need to significantly improve their service quality, product offering, pricing strategy, distribution channels, and to compete directly on service, pricing, products, and distribution with the larger conventional institutions to be able to attract these customers. The biggest challenge is customers that said no, they would not be interested in participation finance. To be able to target these, what you need to do is to really develop a customer acquisition strategy that focuses on marketing and focuses on communication and elaborates the actual proposition that participation finance offers these customers. And participation finance is about more than simply being aligned to Sharia principles or Sharia values. A number of retail customers in a number of markets would be very interested in a financial institution that does not engage in speculative transactions, that does not engage in derivatives or other financial instruments that are synthetic and don't have any real assets behind it. But this is value propositions that have not been effectively communicated to a vast majority of the banking customers. And going forward, we feel that this will be a key priority for all participation banks if they are to increase penetration with the retail customers. Another insight that I want to share, which very much aligns to the previous one, is the lack of knowledge and awareness of participation finance and how it works. From our sample, 80% of customers who said that they do not bank with a participation bank said that they don't understand this industry or they don't understand the products or how they work. In addition to that, 40% of the customers that do bank with a participation bank had the same complaint. They also felt that there was very little clarity on how products are structured or how the industry differentiates itself from the conventional banking industry. And we feel that this is a key priority area for participation banks to address and for the industry to address going forward, because they need to increase awareness and increase knowledge and understanding of products and how it's differentiated from the conventional banking segment. And in our report, we cover a number of different strategies that have been adopted by different regions that were developing Islamic finance. And you distinguish between reaching out to mass market, reaching out to young potential future bankers, reaching out to the more established segments, reaching out to corporates, reaching out to governments if required. And this is covered in our report in more detail. Some of the other items that we've covered as part of our survey include satisfaction levels with banking institutions, include customers' preferences in regards to services or other characteristics of their banking propositions. It includes the importance of return and the protection of capital and consumers' views on this. And it includes the acceptability of participation windows amongst consumers. And this will all be covered in more detail in our report, which will be available at the end of the month. So what is our assumption in regards to the growth of the industry going forward? Our assumption is that by 2017, 5 years from now, the industry will reach $70 billion. This yields a growth year on year of about 17% and a total market share of 9% of the overall banking sector by 2017. This is very much aligned to the target that the Participation Bank Association of Turkey and the government of Turkey have with regards to reaching a target of 15% market share by 2023. I will quickly run through, as we're running short on time, some of the unique investment opportunities, but basically to elaborate, our report would cover more information on Sukuk, the growth of Sukuk in recent years, the pipeline going forward, some of the key corporates that have announced their interest in issuing Sukuks, and also some of the regulatory developments. We will do the same with the Islamic funds. We intend to touch upon the Takaful industry. We will be touching upon the halal industry, which includes both halal tourism and halal agriculture. And Turkey has a huge potential to develop both sectors going forward. In addition, we will also touch upon microfinance and Awqaf and Zakat structures. To conclude, I want to touch upon what are the key priority areas for participation banking industry going forward. And these are 5 key areas that we've highlighted that we feel will be essential in driving the growth of the industry going forward. Continued political enablement to continually develop and support the industry will be a key driver to expand the reach of participation banks and to grow their products and services. Attracting Islamic funds from other markets where it's more developed and cross-border trade with other Islamic countries that have high growth potential will be a key driver, not just for the overall Turkish economy, but also for the participation banking sector in Turkey. We feel research and innovation is a key area that needs to be developed, and this was highlighted by a number of participants of our survey, and a number of executive interviews conducted with participating banks gave us the same message, that this is a key area that's lacking in Turkey, and it's a key area that needs to be addressed to continue to develop products and services that meet the needs of some of the other segments beyond simply the consumer segment in Turkey. The people paradigm, which means to educate and increase awareness and increase knowledge and understanding of the industry, will be a key component to grow the industry, particularly in the consumer and SME segments. And creating sustainable growth, aligning the industry to the real economy, highlighting the growth of real assets and economic activity through the engagement of participation banks will be key to further developing the sector going forward. Ladies and gentlemen, thank you very much for your time, and I think we will now take questions if there are any on this report.